Welcome to Stock Talk with Nico Kritikos. Today we're going to be going through what stocks Cathie Wood and ARK Invest are buying and selling. So first thing we can look at here is what their top investments are. And you can see Tesla's number one with over $1 billion in there, over 8% of the weight. And then we have Teledoc Health, we have Roku, Zoom, Coinbase, Exact Sciences, Block, number 7, Unity Software, Intelia Therapeutics, Twilio, UiPath, Beam Therapeutics, Spotify, CRISPR, and DraftKings, right? So a couple ones in there that I'm not super familiar with, like the therapeutic companies or some of the genomic space. Those stocks are, you got to be really knowledgeable about that area of science to know about that. But I do know about Tesla and Teledoc and Coinbase and Block and some of these other ones. The other thing we're going to look at is what they bought and sold as of yesterday. So we're going to look at the last couple days, but as you can see here, they were buying Crowdstrike, they were buying UiPath, Coinbase, Shopify, they bought Monday.com, and they sold Etsy, Splunk, and Twitter. Now, Crowdstrike is an interesting one because although they're in a great space, that is a cybersecurity stock. And those are in big demand right now, especially with the Russia thing going on. But Crowdstrike, the problem with this one is that it trades at one of the most expensive valuations in the market. So $45 billion is the market cap, right? A 4 PE of 200. And this has come down a lot, though. If you look, it was trading at over 700 a year ago. A price to sales of 31. Same thing. That's super rich, but that has come down almost in half of where it was. And if we look at how much they're expected to grow, we can see so they're a 4 PE of what, 200, and they're going from 58 cents a share for EPS to 91 cents. That's pretty good. That's like what that's got to be a 70%, maybe 80% increase. That's pretty good. Still, a 204 PE is very high. And then we have the revenue. So this is a $45 billion company, and they're just about to do 1.4 billion for this year. That looks incredibly overvalued. That means 63% revenue growth is very high, but that means the price to sales should be less than half of that. And so that means like a 30 or below would be good. And it's trading at a 30. So this might actually be closer to a fair valuation. The other thing to take into account is how much equity they have. If they had like, 15, $20 billion of equity, then that might be more understandable. But let's see how much they have. I'm sure it's less than that. Yeah, they have they have under $1 billion of equity, and they're doing a little over $1 billion of revenue, and it's trading at $45 billion. So that's one of the most expensive trading stocks in the market. Tesla makes sense, of course, because that's been an early investment for them since 2018, and the stock's up, over 1,500%. So of course that's going to grow to a huge position. Roku is another interesting one. That Roku has come down so much. You could see it traded super high last year. It went up to $480 a share. Now today it's only 137. So this one has definitely come down a lot, and it actually looks like more attractive of a valuation for this company, right? Then we have Coinbase and Shopify. These are two that I own, right? Coinbase, I do like Coinbase. I was swing trading this one for a while because it kept dropping to right around 220, and then it would shoot back up, to come up here to around 300. And I did that at least 2 times. But now this last time I did it, I bought in at 220, and it just kept going down. So I'm still not, my cost basis is 223. We're still not there yet. But the thing I don't like sometimes I don't like the way ARK invests. Like they do a lot of swing trading in small amounts of their position. So they're always, they say their 5-year price targets are looking like a long-term investment. But at the same time, they do a lot of, every single day they're doing buying and selling depending on what the volatility of the stock is. That's why they were selling Tesla when it went up, and they bought Tesla back in the 700s. So Splunk is another one that I've traded before. They sold that. They're selling Twitter. They're selling Etsy. What I don't like though is they sell stocks when they go down. They don't always have the best investing style. I don't know. They do a lot of things that don't make sense to me. They bought Toast right after it IPO'd, and Toast is another one that's a very expensive stock. I like Teradyne. Teradyne is a good one. See, this is what I mean. Selling Amazon at $3,000 a share. that does not make sense to be selling Amazon at 3. Now, there's always other reasons. Maybe they need capital. Maybe, there's other things. Sometimes you have to do things that aren't the best for investments, but $3,000 a share to sell Amazon does not seem like a good idea. I don't really agree with that. Other things, the other one I'm disappointed with is Palantir, of course. This is something that's happened more recently. And if we look at, let's see, where is their Palantir trades? There. So they were selling Palantir. This was probably the last of their shares, 7,000 shares. That was probably the end of it. See, they pretty much, if we look up Palantir ARK Invest Holdings, we can see here that they were super heavy on Palantir. They were buying Palantir around $20 a share. And see, here's around $20 a share. They peaked out when it was $24. They owned 37 million shares, right? They kept increasing their shares in the $20 range. Then it comes down and now they're zero. They have 0 shares in this company and they sold out at half the price that they bought it at. So they lost, hundreds of millions of dollars. And it is, sometimes they make some bad decisions, I feel like, but they're in a lot of good names at the same time. Tesla, Coinbase, Zoom is another interesting one. I don't own Zoom, but Zoom is another one that was up huge last year, and then it's come down so much now. This was another one up, at $400 a share, and now it's down 68% on the year. So that's another one that's interesting. Or I think PayPal is another stock that they were buying when it was at $200, and then now they sold it they were selling it, 120, 130. So some of the things they do don't always make sense, but if we keep going, we can see Block is another one. This is previously known as Square. This is another stock I own. Similar to PayPal, they own Cash App, and they're doing a lot of innovative things with Bitcoin. I own 31 shares at a price of $143. Block has the last month, it's been looking pretty good. Especially this past week, it's up 33%. So because they had good earnings, and I think Block's going to be another good one that comes back to $200, $250 a share within the next year or so. So that's another good one. What else do we have on here? Tesla, I have a big position in Tesla. It's my largest position, but I cannot disclose that. Etsy is another, I made a video on this one on my channel. Etsy is another interesting stock, down pretty big from where it was a year ago, right? So the good thing is now with a lot of these names, like if you look at a lot of these names are coming back down to more reasonable levels, because all these different, these growth stocks with strong brands, a lot of them have good business models, but last year they were trading at way too high of a valuation. And so now a lot of them come down and they're actually worth, investing in most of them. But their main ARK Innovation ETF peaked out at what, $156 a share a little over a year ago, and now we're at $68. So I mean, it's pretty much what it's almost cut in half of where it was, right? Or no, it's more than cut in half. Yeah, it's more than cut in half. And so she's been getting a lot of backlash lately, but I don't know. It'll be interesting to see if these stocks all come back that she was investing in, but I don't know. As of now, it does not look good at all, because ARK was buying these stocks when they were trading at super high valuations. Twilio is another one. I think it's a decent business model, decent company, but the valuation was so high last year. This was another one that was at what, $400 a share, and now it's down to 170. So, I mean, it's good they're averaging down on some of these, but a lot of them, they were just buying way too early on. Teledoc is another one. I love Teledoc. Teledoc just reported a couple days ago that they reported a partnership with Amazon. So now when you use Alexa to ask for healthcare or whatever, a virtual healthcare meeting, Teledoc's going to be the one to do that. So Teledoc is another one. This one's undervalued. I own 46 shares at $102 a share. It's down to $74. And this is another one I think is going to, come back up to $150 or $200 a share within the next year or two. But Teledoc is their second largest position, right? So they're also very bullish on this. And it's just another one that, they've made a lot of improvement over these past couple of years. Revenue is growing over 40% a year. but the stock is trading at under what it was 4 years ago. So it's like it's oversold by a lot, in my opinion. If we keep going, we can see what are some other names. Roblox is another one. They were buying Roblox too, along with Nancy Pelosi. And then Roblox reported earnings a couple weeks ago, and it was a disaster. And that's why the stock is down 60% in the last couple of months. But I think Roblox is another stock that has a huge valuation on it, a market cap of $30 billion, and they don't even make a profit. So that's overvalued. It doesn't really make much sense to pay $30 billion or $40 billion for a company that doesn't make $1. But I don't know. Roblox it has a big opportunity. They have a lot of users, right? And they're popular. So that's definitely worth something. But I could probably see it coming back to this $80 range, but they're going to need to improve the financials and the margins for the business. But that's the only thing. They have ARK picked some good companies. They just don't buy them at good valuations. Skills is another one. That's one I bought into. That was a disaster. I'm down big on that. And they've been, it's fell so much probably because of how many shares ARK has been selling. But yeah, those are the main ones. DraftKings is another one I like. It's come down a lot. This is one I own 110 shares at $25 a share. And I think DraftKings is going to come back to 40. I think DraftKings will be 40 or $50 a year from now. They have 30% market share. They have the sportsbook sports betting app, and they also have fantasy sports. And they're one of the most popular names. They're coming out with a NFT marketplace this year. I think they already have it, but they're developing it more so. And they have partnerships with the NFL, the NBA. They have I think a Houston Rockets partnership too. So this is another one that's in a very good position. I think I'm happy with my cost basis on this one. It's a lot of the other ones like PayPal I bought in too early. The cost basis for PayPal is like $189. That's a little bit, I bought in too soon, but this one I'm happy with. DraftKings at $25. I got that one at a good price. But yeah, that is all for today. That is what Cathie Wood is buying and selling. I will catch you in the next video. And don't forget to subscribe, because at 1,000 subscribers, I'm giving out multiple prizes to my subscribers.